Nigeria has the president-elect. That's why Business Morning is back as Channel's Television 2023 Verdict Studio takes a breather before it reopens for the governorship election. Good morning and great to be back here for 55 minutes of current and relevant business conversation. I'm Ini John Mekwa. We start off with oil prices. It edged up on Thursday, extending gains from the previous two sessions on signs of a strong economic rebound in China, which is the world's top oil importer, though gains were capped by a rise in the U.S. crude inventories and concerns over overall global demand. Brent crude futures rose 12 cents to $84.43 a barrel, while U.S. West Texas Intermediate crude futures went up 7 cents, which is 0.1%, to $77.76 a barrel. Both contracts rose about 1% in the previous session after data showed manufacturing activity in China in February grew at the fastest pace in more than a decade. Remember, they put off that COVID curves that was in place, and this adding evidence of an economic rebound after the removal of those strict COVID-19 curbs. However, a 10th consecutive week of crude stock builds in the United States capped the market gains. U.S. crude inventories rose by 1.2 million barrels in the weekend in the 24th of February to 480.2 million barrels, the highest level since May 2021. Well, still talking oil now, but now it's edible oil. Malaysian palm oil futures rose after a near 2% drop in the previous session as heavy rains in the world's second largest producer added to supply restraints. The benchmark palm oil contract for May delivery in Bursa Malaysia Derivatives Exchange gained 35 ringgit, which is 0.85%. By midday, the Malaysian Meteorological Department issued a danger level continuous rain warning for Pahang, Nigeri, Melaka, and some other cities, and warned of continuous rains in other parts of the country. Further supporting prices, major markets in India and China may need to replenish their edible oil stockpile in the coming months, as any adverse weather in India will add concerns about its domestic edible oil production. These are the observation by some of the traders. Well, back here in Nigeria, heightened uncertainty before voting started, and even afterwards, the wait for the election. Our correspondent, Kelly Agiga, went into town just before that announcement of the president-elect, Senator Ahmed Tinubu, to find out how businesses were faring and filed in this report.
The hustle and bustle of Lagos is gradually returning as the wait for the final results continues. At the Kara market, the #1 spot for livestock trade, the scantiness tells the story.
Market is dull because they never bring the rams from the north. Why? Because they are fearing for the election. When the election see the result of who winning before they are coming, because they are fearing may they not fight them, burn their motor and others.
But the market is not moving well, that's it.
We visit the Lagos Trade Fair International Complex, and many shops remain closed.
We call off activities because I don't know what will happen. We announced that the market will close down on Monday, then reopen on Tuesday. But even this Tuesday, many do not come to market. You don't know what's happening in their area. So I will not blame them because they are running for their dear life.
Many people are afraid to come out because of what's unforeseen circumstances and things that may happen.
We also leave for the popular Alaba International Market, and the story is the same.
Most of the shops have not been opening. Some will open, some will not open, because everybody is not well understand the situation of the things in the state.
Because of rumors that so many people are peddling around, that people are coming to attack, that this People are coming to harm the traders, they are coming to loot their goods, they are coming to destroy their properties. So you can see that the shops are closed.
These traders and business owners also have a message for the country's next president.
Anywhere anybody is in Nigeria, the person must be free to live there and do his business there.
The government has always neglected the informal sector. But we are the key to the economy. Their policies on foreign exchange, their policies on the clearing, is a very big detriment to our businesses.
As the declaration of results becomes clearer, Nigerians, investors, business owners, whether big or small, and traders await the magical ideas the country's next president will bring on board to tackle the ailing business and economic environment, especially in terms of the production and consumption of goods and services and the supply of money. From the Alaba International Market, Kelly Egiga reporting for Channels Television News.
So there you have it. That report very well exposes some of the fears of some members of the informal sector. Talk about the task ahead for the new president, the president-elect at this time, Senator Ahmed Tinubu. I mean, before now, we did not have a name to that position, but now we do have a name. We have a president-elect, Senator Bola Ahmed Tinubu, and we do know he's been given the certificate of return. He has made some promises. At least I know one of it is that the first thing he would say at the APC Secretariat after he was announced the winner, he promised to run a knowledge-based economy. Even if we don't have that in the manifesto, we have that in his voice. So let's see how he could do this and the expectation as he settles in. And to help us discuss that, we have the Chief Executive Officer of the Center for the Promotion of Private Enterprises, Dr. Muda Yusuf, joining us. Dr. Yusuf, good morning.
Good morning.
How long was this wait? Was it a lot of people, as you heard there, you know, in Alaba International Trade Fair, even after the result had started being collated, there was a lot of uncertainty, there was tension, especially here in Lagos, because of the tribal sentiment thing, unfortunately, which we seem not to be able to dispose of, you know, but are things back to normal now? Have you noticed?
I think things are gradually getting back to normal. And we must also commend the key players in the political space. You know, they appeal to their supporters, you know, to eschew any form of violence, protest, ethnic attacks, and things like that. So generally, I think things are getting back to normal. And I must also commend even other players in the political space.
Yeah, like yesterday we had the Labour Party come out, even though the day before it had been tense and, you know, anger. Yesterday we had the vice presidential candidates come to speak to Nigerians and say, oh, please, let's embrace peace. We can head to court and things like that.
Exactly, because we need that peace. Everybody needs the peace. Whether you win or you lose, everybody needs the peace. So we must commend the maturity that has been displayed by the major players in the political space to ensure that we have calm, we have peace, and to also promote the ideas of approaching things constitutionally, you know, and seeking redress through legal means. I think that is what we need at this time, because the economy cannot afford any major disruption.
I mean, remember the disruption we had with the cash just before the election, and how much the country was losing, and the perception of investors. You know, the foreign investors were just trying to attract, you know, a lot of discouragement coming from there.
Yes. Even locally, many small businesses are already groaning that they have been off business for a long time, you know, coming from the currency crisis to the election.
To the
petrol crisis, then what looked like a shutdown for the election, you know, is beginning to take a toll on many businesses, especially the SMEs.
Except the equities, Dr. Yusuf. I don't know if you follow the equities. I mean, it was really booming. It was just yesterday that we had maybe profit taking, but I mean, we had more than 55%, 0.5%, 0.5% positive for the first day. That was on Monday. For Tuesday, the market was up again. It was just yesterday there was a pullback, which could easily be, termed profit taking. I don't know. Is it investors were running there to hide or what?
No. It's a question of expectation. What I think is happening is that there are some positive expectations as a result of this outcome, that things are likely to change for the better, that some policy issues are likely to also change, which may impact on the general outlook of the economy. Because, the market is to a large extent speculative, and some of these things are driven by expectations. So if there are positive expectations, you expect that kind of development in the market, and that is the way it is all over the world.
Okay.
Markets react to things that are developing. If they are positive, you see some positive impact.
All right, Dr. Yusuf. Yeah. Now let's look at the task ahead for the incoming president and his team. But he's the head of the team, so it's him. So we see inflation at this time is in one of the records, 21.82. We have soaring food prices. We have our naira that has weakened, and hit worse, by some of the policies that we've had at this time. We have the issue of debts, which which is projected to hit 77 trillion by the time he's coming in May, and then if we go further, we have the issue of subsidy also on the plate. We have insecurity. We have agricultural production, which has dropped. We have the trade sector. It's a whole lot for Senator Tinubu to handle.
It is.
And he has to do this because when one of our analysts during our election studio analyzed the win, you could see that it seemed like you had more people in the opposition. For instance, the second and the third, if you added their number together, it gives you higher votes than, So, each of the top 3 candidates won 12 states, showing a split of preferences. So I guess his first assignment to grow the economy would be to win the opposition over, or at least Nigerians who are in the camp of the opposition, before he can really move forward or sets a very profitable step or beneficial step.
Yes, that is very important, and that speaks to the legitimacy of a government. It's not enough for you to win an election. It is also very important for you to achieve legitimacy. And when you look at the structure of this election, it has been one of the most competitive that we have seen in recent times. So it makes a lot of sense to aspire to build a system that is inclusive. Because even if you look at the voter turnout, if you compare the PVCs collected, in Lagos, for instance, was, I think, around 6 trillion. I mean, 6 million.
We pray one day.
6 million, and the total number of people that voted was, I think, less than, just about 1 million or less than 2 million. You can see even when you compare that. So there's a major task of seeking legitimacy through reaching out to the other competing parties after all this dust has settled, because the dust has not fully settled, and also making sure that we bring all Nigerians on board. We give all Nigerians a sense of belonging, irrespective of which parties they voted for, irrespective of their religion, irrespective of their ethnic nationalities or whatever. We need to ensure that we make a policy that gives everybody a sense of belonging, and also that actually restores hope. Because when things begin to function well, when the economy begins to perform optimally, people will forget about all this polarization, dichotomy, and all of that. So that is why it is very important for the president-elect First of all, by now, I expect him to have been assembling a transition team on the economy so that engagement can quickly begin. And it is very important to stress the importance of quality economic governance, because you realize from statistics which are very disturbing. But if we had had quality economic governance, yes, there may be challenges, but the challenges will not be as bad as that. And that starts from building a very good economic team. That is very important to ensure that we have a level playing field, to ensure that we move this economy from a patronage economy or a rent-seeking economy to an economy that actually encourages and incentivizes entrepreneurship.
Dr. Yusuf, just before you go on, if this is not achieved, if bringing especially those on the opposition and all of that, those sentiments and bringing if it is not achieved, what does the economy stand to lose?
No, because you can't build something on nothing. If you have a politically unstable environment, it is very difficult to grow the economy. It's very difficult to attract investment. And if you don't have investment, you can't grow the economy. If you don't grow the economy, you cannot ease poverty. You can't create jobs. You can't generate revenue. So a lot depends on how stable the political environment is. So it is very important that all the key players seek to achieve that stability in the environment, to ensure that we have legitimacy beyond just the fact that somebody has won the election. There must be that legitimacy of acceptability of what the outcome is, and there should be a consensus that we have to move on. Because this is the only country we have, just as the president-elect said. So we need to make sure that we don't have a crisis that will disrupt everything. Because if you have that kind of crisis, this economy
then everybody is stuck.
Everybody is stuck.
It doesn't matter what sector.
Yes. It's like, stuck. A roof, dropping on everybody. So it doesn't serve the interest of anybody for this system to be disrupted as a result of this election.
It's very, very important. And that's why, I mean, we were really glad when we saw Labour Party come out to calm the nerves, because we saw some protests in different parts of the country, so that, I believe, will calm nerves, and then everybody can go to court and try to, air their... But you talked about assembling a quality economic team. I don't think Nigeria lacks the brains or the human resources. If you talk about economic team, we've seen it done before, but it always seemed like it's more about the intentions or the spirit behind it. So sometimes we even do have the economic teams that when you look at the resume of the individuals, it is very impressive. When you see the policies, they are very impressive, but implementation now becomes another story. So what can the incoming president, Senator Bola Ahmed Tinubu, what can he do differently, you think?
What needs to change is the fact that when you have an economic team that is independent, that is very professional, that doesn't owe allegiance to any particular segments or constituencies in the country or in the economy, the president has a duty to listen to them. Because just as you said, it is not for lack of an economic team. It's not for lack of people with competence in government. What is missing is when they give, because economic team is advisory. They can only advise the president. So if the president listens to them, I think a lot will change. And if there's also sufficient inclusion in the policy process, sufficient consultation, because nobody knows it all. If an agency of government walks up to the president and comes with a proposal that has significant systemic effect for the entire economy, it behoves on the president to invite his economic team to examine and interrogate whatever proposals have been brought together. We also have the National Economic Council. We have the Federal Executive Council. So there has to be a much more participatory process to ensure that we have the right kind of policies and implementation. And it is also important that we have proper and more robust stakeholder engagement. Because it is the stakeholders that are actually on the ground. Whatever policies we are putting in place, it is not out of place to involve the stakeholders in the conceptualization and in the implementation, so that the policy process can be a lot more enriched. So all of these things are very important, and these are some of the missing links that we are seeing. For instance, take the issue of this currency thing. It was practically something between the central bank governor and the president. I'm not sure other stakeholders were carried along.
Because
this is without
the minister
prejudice.
had said that she was not aware.
She was not aware. Even without, this is without prejudice to the autonomy of the central bank. But the point is that no autonomy or independence is absolute, because we all have a common goal to advance the welfare of the majority of the citizens. So nothing is lost. Autonomy is not lost. Independence is not lost if we seek the views on or the perspectives of other people. The president has an economic advisor. I'm not sure in many of these things he was even consulted, because he's a very brilliant and very, very, very sound economic professional. So these things are key.
All right, so when we talk about that economic team, you did say that it should be people without political allegiance.
Yeah.
I don't know how possible that would be, but do you see them, maybe people running, maybe manufacturing, people in the private sector, people? Sometimes we've seen some presidents fish for human resources abroad. Some names of ministers in the past, were brought in from outside the country. Maybe those who are doing well in ECOWAS, in all of those World WTO and World Bank. Do you think that would be the thing now, or do we take people who are close to the grassroots, know exactly what's going on here? Which one do you think will work better for us at this stage?
It's a combination of all of these things that you have mentioned. If you are dealing with macroeconomic policies, something that impacts all sectors of the economy, the welfare, the different sectors of the economy, there are policy formulation processes that you can support from economic theory, that you can support from empirical evidence, that you can support from global best practices. You need people with that knowledge to be able to come up with that kind of policies. Things like the foreign exchange policy, for instance. There are standards that work everywhere. Economics is a science, even though it is a social science. It's a social science because there's a lot of human elements.
Peculiarities for the different environments.
But it's a science because you can predict outcomes. That is why it's a science. So you need people at that level to deal with macroeconomic policies. Then when it comes to sector-specific policies, then you need to engage the stakeholders. If you are talking of oil and gas, for instance, of course you already have the PIA, and the PIA had a lot of input from stakeholders. So if you are doing anything in that space, it makes sense to relate to the stakeholders, not just to favor one or two people, but relate to stakeholders in a way that you have a level playing field. If you are talking of manufacturing, you have to relate with those who are in the manufacturing. It's not as if everything they put on the table you will accept, because there's also elements of self-interest and things like that. But a good policymaker should be able to, distill some of these things and know what is good for the overall economy. Because we cannot be running an economy where the stakeholders are completely disconnected from the policy-making process. There is no feedback mechanism. There's just a conceptualization of one or two people that this is the way to go, and the whole country is thrown into it. We saw that with the currency problem. We saw that with the border closure. We saw that with even this foreign exchange policy, because it's one of the major things that this new president has to quickly address. A number of reforms that are very critical to moving this economy forward. Because I must emphasize, if you don't fix the economy, you cannot address all these other issues. Because you need a robust economy to generate revenue. You need a robust economy to grow the economy. You need a robust economy to create jobs, to alleviate poverty. All of these things are very critical, and undertaking these critical reforms, foreign exchange, our monetary policy, the customs, the tax situation, the trade policy, trade facilitation, subsidy, oil and gas, the Nigerian customs. There are so many things, even regulatory environment.
Obviously.
So there are a whole lot of issues that this president needs to quickly begin to add. And in some of these things, there are quick wins that you can quickly deliver to deepen the legitimacy of the administration.
And win the hearts of Nigerians.
Exactly.
I mean, that could also be another way to close that opposition gap and get people to believe in the administration and all that.
There are quick wins that the administration should quickly look at and make sure that we implement that so that the citizens, you endear yourself to the citizens. Those things are critical.
Well, obviously, the president-elect has a whole lot to deal with. And as you said, we do hope at this time, after resting maybe a day or two from the campaigns and all of that, it gets to, that setting up the economic team and the transition first, and of course
very critical,
the economic team. Well, we'll be following the story, and you know us here in Channels, we'll follow whoever and bring the story and bring perspective. We didn't get to talk about, how he could achieve that knowledge-based economy because we're out of time, unfortunately.
No, he has a robust something on digital economy and all of that. All this is, but again, there's a difference between the manifesto and the reality. That's a whole lot of difference.
Yes. All right, Dr. Muda Yusuf, Chief Executive Officer of Center for the Promotion of Private Enterprise. Thank you so much for your time this morning.
Thank you.
So it's a new dawn for Nigeria, even though it doesn't start until May 29, but we'll keep setting the agenda and keeping up that conversation. Let's take a break now. When we come back, we'll head to the commodity space. To stay with us. This is Business Morning. We're back. It's on Channels Television. Welcome back to watching Business Morning here on Channels Television. We now move over to the commodities space, and we have joining us, not physically this time, joining us all the way from England is Dumebi Oluwole. Dumebi, I miss having you by my side. Good morning.
Good morning, Ini. I miss having you by my side.
I hope you have not jackpot. We have a president-elect now, so you should be here. You should be here talking about what to expect, maybe.
Don't worry, you'll see me soon.
All right. Okay, looking forward to that. So we know that one of the things that the new president, the incoming president will have to deal with is the issue of inflation. We saw it hike for the last one, which was almost at 22%, 21.82. And now Financial Derivatives is projecting again that there'll be a tapering of that. The other time, that was your expectation, that you didn't hit it. Why? Are things normal now?
Ini.
Yes.
All right. So starting with the first thing, which is what you've said about the fact that the new president-elect, has to tackle inflation. And to properly contextualize that, we need to understand the fact that Nigeria's inflation is not just what we're seeing today. It's not just a matter of the fuel scarcity that started a few months ago, or the cash crunch, or the fact that prices are higher right now. There are endemic issues affecting Nigeria's agricultural sector that need to be addressed first before Nigeria can comfortably, return back to single-digit inflation. And these issues stem from insecurity to poor productivity of our agricultural sector, and that completely, boils down to the fact that Nigeria's agricultural produce is low, and this is because of input materials. Farmers are impoverished. They have very low income. Seedlings are low as well. Fertilizer products, they don't have access to these things. Insecurity, which is the biggest issue. All of these things are affecting Nigeria's ability to produce enough. So these are the issues that are affecting Nigeria's productivity and triggering inflation and causing inflation to remain as high. So, but contextualizing what is happening now and FDC's forecast for inflation for this year, or rather for February, stating that it's going to fall, it's just base effects. February last year, inflation increased by 10 basis points. I think it's about 15.7%, and that was based off of the issue of diesel prices rising astronomically. So all of this contributed to the increase in the price of commodities or headline inflation. So when you coming to 2023, because we're coming from a high base, that has reflected in the reason why headline inflation is declining. But most importantly is the increase in month-on-month inflation. So while headline inflation might be tapering a little bit, month-on-month inflation is going to increase, or would likely increase by about 0.08% in February. And month-on-month inflation is a better reflection of inflationary pressures today. So clearly, inflationary pressures are still very high and would likely, maintain this high trend or double-digit trend in the near term. But another significant thing to mention is the fact that Nigeria's inflation basket is not, it doesn't capture the impact of inflation today. And the reason is because the last time Nigeria reconstituted the inflation basket was in the early 2000s. And as such, inflationary pressures have, things have changed. The price in 2006 or in 2005 or in 2010 is not what it is today. There are more commodities, and the inflation basket is not reflective of all of this. So even it's very, very possible that the inflation numbers we're seeing today, the official inflation numbers we're seeing today, is not reflective of what is happening in the economy. So these are some of the issues for Nigeria's inflation. Like I mentioned again, just to reiterate, that the decline in inflation for February is just it's just reflective of the base effects. We're coming from a high base last year, and that's why headline inflation is declining. Another thing to also look at is the fact that exchange rates, which has been a very, very major stoking factor to inflation, was relatively stable between the end of January and February. So that's some of the we also need to...
it may be interesting that you mentioned that, because even recently, IMF did talk about the issue of our index, our inflation baskets, the index that we used to measure it. It's been so long, we're not sure it's capturing the reality, and we've discussed it a couple of times, even here on Business Morning, and we do hope that perhaps one of the new assignments will be to recalibrate that basket so that it can actually capture the reality. So when we have inflation number, it will actually reflect what it is. But I saw you've already doused our joy that there's going to be a decline in inflation, even though we do have here that domestic prices of pepper, onions, palm oil fell, while prices of beans, rice, and tomatoes rose. This is for February, so I wanted to ask, is it the cash crunch that caused it? There was no cash.
So the cash crunch definitely did have an impact on some prices, but like I said, it's always good to contextualize what's happening and not exactly isolate issues, but just look at them holistically to see how much of an impact it has affected the economy. So there's the issue of the cash crunch, and there's the issue of seasonality, and those are some of the things that have affected prices. So seasonality did have a huge role to play in the price of some of these commodities that you're seeing declining, and the prices of some of these commodities that you're seeing increasing. So for some of these commodities, their planting season is now, and that's why their prices are rising, while for some, the harvest season is now. So that's why we're seeing their prices decline. But on the issue of the cash crunch, has affected Nigeria's economy on two sides, the supply side and the demand side. And for the supply side, we're seeing that, marketers, wholesalers, manufacturers, a lot of them saw a huge halt or a screeching halt, basically, to their ability to procure goods, and it affected transactions, and this in turn, tapered their their stock and ability to even supply. So first of all, we look at it from the fact that these companies or sellers did not have cash to buy inventory. So literally what they were selling or what they had available to sell was what they had with them before the cash crunch hit, in the magnitude that it did hit the economy. Then you look at it from the demand side. People did not have as much to to transact, to buy goods. Even when they decided to transfer, there are transfer charges involved. Even when they decided to also, transfer or make use of POS, you find that they had network issues and all that. So basically, there was a stall in there was a decline in transaction activities, and that has a ripple effect on inflationary pressures or the price of goods. So while prices could have been increasing because there's little supply, there's little there's a shortfall in supply. On the demand side, demand is declining because people don't have as much to purchase goods. So when you net the effect, you see that the demand effect and the supply, when they come together, you find that it did have somewhat of a mute impact on commodity prices. So generally prices were just soft. It wasn't exactly higher because people could not also buy. So it was a huge deal, and basically the impact was mixed. But when you look at it holistically, transaction levels declined. People didn't have cash to make as much, buying. People didn't have buying power basically. So you find that the demand part of it really did have more of an impact on the economy. So when you net it, like I said, the impact on prices was somewhat mute. So the cash crunch, most of the impact of it was just on how it's dilapidated, or how it squeezed consumer disposable, how it squeezed people's ability to transact, and the level of output in the economy, because manufacturers could not produce, people could not sell. So, but on the level of prices, it had somewhat of a mute impact on commodity prices.
Thank you so much for sharing your views with us this morning. We'll talk to you maybe in Nigeria, from Nigeria next time. Well, enjoy your stay and hope to see you soon.
Thank you.
All right, now from commodities market to the money market, and just as I asked Dr. Yusuf earlier, we had seen a boost in the markets Monday and Tuesday. We do not know, was it because people were expectant, investors were just checking? It was a lull at that period, but investors were doing very well in the equities markets, especially even in the money markets, fixed income market by yesterday, after or just before the announcement of the president-elect. But anyway, I guess Anite will have the details of how this market did. Anite.
Yes, good morning.
Morning. We see a pullback after two consecutive impressive outings, and then we did see that impressive earnings or earning rate yield in the money market and the fixed income market.
Yeah, well, so interesting to know that the month of February, we're in the month of March. And the month of February, we had a very strong gain for the market. The market was
up about... equities market?
Equities market, to be precise, that's it. We ended the month of February 4.8%. And of course, the market, just after the election, the market was still rallying. But some points...
investors have to take profits.
Yes, it is profit-taking. And at the same time, it's a positive market breadth. So it's not really in reaction to the outcome.
I don't know if you're following, some analysts had said that the three top contenders, the PDP, the APC, and the Labour Party, that the individuals, the presidential candidates, have already been perceived as pro-market individuals. So whichever way it goes, we now know where it has gone, the market will breathe a sigh of relief and joy. So I guess that's also having an impact.
Yeah, and I think that's because of that no expectation. There was no expectation because, of course, the market had already priced in across,
exactly.
across the fixed income market,
exactly.
the equities market, as well as the unlisted securities market. So I'll be giving you that detail.
All right.
Now, so midweek trading session, we are back. We're in the red, and now that's after enjoying a very bullish run of 4.8% throughout the month of February, and then year to date we're at about 8.31%. So, but for this market, where midweek trading sessions were down by more than half of a percent, and then the decline is about 162 billion naira, which you can see there. And at some point we had crossed the market. It had gotten to about 55,000 points, and then just made a slight pullback. Then in terms of the valuation, it says hit a very multi-year highs. Its highest so far sometime in 2008 at 30.4 trillion naira. Let's move over to the activity chart. We saw it was actually the decline on the share price of Airtel Africa that made the market to pull back. Airtel's share price, it was down by about 5.3%, so that's why the market was down. But let's take a look at the volume. The volume of transactions, that's the total volume of shares traded for Wednesday, it was down by 6.40% in contrast to what you had on Tuesday. And then for the value was also up. We had the shares of GTCO, which was the most traded by value at 1.26 billion naira, which is why you see this value increasing by 49.77%. But in terms of the deals, the number of deals carried out there, it was down by 2.14%. Let's move over to the activity chart, or to the sectoral performance. The sectoral performance, we saw a kind of a slightly mixed picture there, but the lone decliner that we had was on the industrial goods counter, which is down by 0.1%. And market breadth was positive in terms of the number of gainers against losers. We had 29 gainers against 12 losers. Now, to give us more details for that market, let's talk to Andy Saku, a stockbroker at Capital Care Trust. Good morning, Andy.
Good morning, Annette.
Yeah.
How are you doing?
I'm fine, thank you. So now this is the morning after the announcement of the final winner for we have a new president-elect in the name of Bola Ahmed Tinubu. So now the market has been enjoying a bullish run, and so far at the same time we've also seen a release of fourth quarter and full year 2022 earnings released to the market. So can you talk us more about the morning after this announcement and how the market's moving at this moment?
Okay, Annette, first of all, let me congratulate Nigerians for a big show out at the election. And it doesn't really matter on which side of the divide you are. One thing that is key is that everybody showed up with the passion of Nigeria being her country, the country that we're all proud of, and we desire to have a better reach. All said, we know that you cannot divorce the market from the political landscape. So to that extent, I commend all Nigerians, whether you feel you're on the victory side or you're on the loser side. I think the key interest still remains the project Nigeria. So for that, I think that we are on the same boat, in the same boat, heading towards the same direction. Whether there are faults or cracks along the line,
okay,
this will be fixed. So the market so far, post declaration, we saw the market yesterday, particularly, trimming down 54 basis points. But let me say it had little to do with the election, as it were. Interestingly, a former Indian president was asked the question just post-election what he thought was going to be the effect of his winning on the market. And here's what he said, that he simply does not understand the working of the animals in the marketplace. Those animals in the market, the bears and the bulls, will always have their show. So Airtel took this shine out of the market yesterday, having lost over 5%. That singular act alone brought down the market. If you take out that stock performance of yesterday, the market would have remained in the positive territory.
Okay.
I do think that so far the market has remained positive right from January, where in excess of 5% positive as we speak. I do think that with this winning streak that has been proclaimed, the peace and serenity of the environment is likely to put the market further into the blue.
Okay.
And my hope for today certainly is a positive turnout.
Okay, Andy, just within just about 30 seconds, what's your outlook for the rest of the week? We're Thursday, and then by next week we will be getting into the full week of March. What's your outlook, just in 30 seconds?
The interesting thing about the entire market right now is that the numbers we're seeing from full year results are very, very attractive. We're seeing declarations of dividends of companies that has been historically acquainted with dividend payment. They haven't made a shift to the negative. They're actually improving on their dividend performances. And therefore, there's no reason for the market to, begin to weaken. I still have a positive outlook for the market.
Okay, thank you so much for that positive outlook. And also, we also will share in this positive outlook and forecast for the market in the new month of March. So that was Andy Saku, stockbroker at Capital Care Trust, giving us details about the market. Now, let's move over quickly to the unlisted securities market. For the unlisted securities market, we had a gain of a mild gain, 0.02%, which was largely driven by the shares of Afriland Properties, which rallied the market and was at the same time the most traded securities on the NSD or OTC exchange for Wednesday. And then for the bonds market, for the fixed income market, we had the bonds market being bullish, the treasury bills market. It was also not a quiet trading, but because investors had no expectation. So that's it in it for the markets. It's still positive so far.
All right, well, we look forward to more positives, but we always have to tell ourselves the reality, which is there will always be profit taking.
Definitely.
Whenever the market goes up.
Yep.
Thank you so much, Anita.
Pleasure.
All right, let's move over to the UK now, where Juliana is standing by in the studio there in Channels Television. Oh, I don't know if she's in the studio. Juliana, good morning. You tell me, are you in the studio?
I am in the studio, but I'm at my desk.
Okay.
Our studio is busy, but of course I had to say good morning to you, Inni. It's been a while.
Been a while, Juliana. You went to Turkey, tour, all of that. Not very good sight from there, but you've been very, very busy. Then you did the courts, and you left us here in business, Juliana. We're hurt. We're heartbroken.
I will never depart from my business team. Absolutely not. The best team at Channels.
Thank you, Juliana. So tell us, the election, we have a president-elect here. What's the feel there? What are Nigerians saying? What's the reaction, especially to the result?
I think, first of all, it's important. Let's start with the British position, shall we? And Rishi Sunak, the Prime Minister, was, I think, possibly the first world leader to publicly congratulate the new president-elect, Bola Ahmed Tinubu. He did this via a tweet. I don't know yet if they have had a conversation, basically saying congratulations, and that the UK-Nigeria relationship remains important and significant. There was a further press statement sent out by Foreign Minister James Cleverly, who also congratulated our new president-elect, but didn't avoid talking about the elephant in the room, which is that what the position is of opposition parties and millions of Nigerians. And I think if we talk about Nigerians in the UK, I think it is important to say that there are many Nigerians who are indeed very happy that the All Progressive Congress have maintained power, and they are happy with the new president-elect. Is that everybody? No, but I think considering the mood music and the sentiment being that sometimes the loudest voices get the most airtime, I think it is important to say that the All Progressive Congress have significant support in Britain. However, of course, the international headlines and the observers know that this is going to be an uphill challenge in terms of business and prospects and Nigeria's prosperity. I think it's fair to say that on the whole, most people can see that it's night and day between the kind of mandate and the position of Muhammadu Buhari and Bola Ahmed Tinubu. Some investors remain bullish as well. Yes, we are going through a significant cash crisis that is only making the lives of Nigerians, far worse in terms of their day-to-day activities. But then, of course, when there are challenges, opportunities are available. And I think the Bitcoin world certainly feel very optimistic about where Nigeria could go with its cashless society. And there have been similar sentiments expressed in Forbes magazine, in the Wall Street Journal, and other places. However, of course, everybody knows that this was a pretty controversial ballot.
Yes.
And we're all praying.
Yeah, we're praying, Juliana, and I know you are with us, and so your prayer will make a difference. But I mean, we just hope that the peace is sustained and the agreed parties go to court and the economy can at least have a level of stability. Juliana, thank you so much. We'll hope to have you for Business Incorporated.
I hope so too, if you want me. Okay. If you still want me, Annie.
We want you all the time, Juliana. All right, so we're almost out of time, but we cannot help but do a bit of crypto. Laddie, we've eaten into your time today. It's not my fault.
No, it's fine. It's fine.
Because we have a new president-elect.
Yeah, we have a president-elect, so it's fine.
Thank you. Thank you for your forgiving spirit.
Yeah. So let's dive in now. Market cap, 1.07 trillion, down 0.88%. We see volume traded this morning. That's also down 2.61%. So we see the market quite volatile this morning. Bitcoin dominance sitting at 42.31%. Let's look at the price of Bitcoin this morning, $23,448, down 1.63%. And we see volume traded $23.07 billion. Obviously, investors in this market still quite cautious now, with the Fed looking to hike rates even more. Their next meeting this month, 50 basis points expected. So we're seeing investors trying to take position for that. Maybe we might see some sell-offs there. Let's look at Ethereum now, $1,644, down 0.34%. We know Ethereum is holding that $1,600 level for a while now. Volume traded $7.02 billion. Let's look at the top alts by market cap. We see it's all red, sell-offs across board, with Matic there, the biggest down. That's Polygon, down 2.61%, $1.22. And XRP still holding that 30-cent range, down 0.55%. We see BNB losing the $300 mark, down 1.89%. So we're seeing sell-offs across board now, but it remains to be seen how the market plays out tomorrow, being Friday. Let's look at the top gainers counter now. We see it's MakerDAO topping that counter, up 5.99%. So it's a lean gainers counter we have this morning, with Mina token 99 cents, up 3.04%. So it's not double-digit gains, and it's showing, sentiment in the market right now. It's neutral. We know we've been ranging neutral, greed, but now hopefully we don't get to fear this year.
Hopefully. Hopefully.
Exactly.
Laddie, thank you so much for giving us that market. We'll see you at 1:30 for 1:30. Business Incorporated.
Okay.
And please, you'll be having Juliana.
Juliana, of course we want Juliana.
All right. Okay, so that's it. We're back from the elections, at least for now, until we head back for the governorship. And of course, the message is, let's keep the peace. The economy can only grow when we have peace. You can only make money, invest, and make profit when we have peace. So let's keep the peace. That's our message here on Business Morning for today. We'll do this again tomorrow before the weekend. I'm John Mekwa.